The biggest lie in today's media is making you believe you can get rich by trading stocks. But think for a second. Do you really believe you can outsmart giants like JP Morgan or Goldman Sachs? Firms with billions of dollars, cutting-edge technology, and armies of the smartest minds working around the clock. The truth is harsh. Your chances of beating them are very, very low. So then the real question is, how do people like Warren Buffett or Jim Simons actually become rich through the stock market? Welcome to Finance Master. In today's episode, we're going to uncover the dark truth of the stock market, secrets hidden behind the flashing numbers, shocking realities that most people will never tell you, and the real way wealth is built in this game. To truly understand the dark truth, we first need to understand where the stock market began. The story goes back to the early 1600s in the bustling city of Amsterdam. Back then, sea voyages were extremely risky. Ships could sink in storms or be attacked by pirates. A single journey could make or break a fortune. To share this risk, the Dutch East India Company came up with a revolutionary idea. Instead of one person funding an entire voyage, many investors could pool their money together, each owning a small share. If the ship returned with spices and treasures, everyone earned a profit. If it sank, the loss was spread among all investors. This idea of buying and selling shares in a company quickly grew, and soon Amsterdam created the world's first official stock exchange. What started as a way to fund dangerous sea expeditions eventually evolved into the massive trillion-dollar markets we see today. But here's where the story gets interesting. The stock market is no longer just a place where merchants fund ships. Today, it's a battlefield, and on this battlefield, there are many different kinds of players. At the smallest level, you have retail investors, ordinary people like you and me, buying a few shares through apps and hoping to grow our money. But we're just tiny fish in a vast ocean. Then come the institutional investors, pension funds, mutual funds, hedge funds. These players control billions, sometimes trillions, of dollars. Their moves can swing the market itself. Next are the private banks and investment banks like JP Morgan, Goldman Sachs, and Morgan Stanley. These are the giants of Wall Street, armed with research teams, cutting-edge technology, and insider access that retail traders can only dream of. And finally, there are the high-frequency trading firms, the silent predators. They use algorithms and supercomputers to place thousands of trades in fractions of a second, making profits before you can even click your mouse. All of these players exist in the same marketplace, but the truth is, they're not playing the same game. And unfortunately, it's usually the retail investors who end up paying the price. Most people have no idea how deep this game really goes. If you don't want to miss the truth behind money, finance, and investing, subscribe to Finance Master right now. So what does this mean for you and me? Imagine you're in a running race. The rules are simple. Reach the finish line and collect as much prize money as you can. Sounds fair, right? But here's the twist. While you're running on foot, your opponents are riding motorbikes and racing cars. Do you still think you can win? That's exactly how the stock market works today. We, the retail investors, are the runners. Meanwhile, the institutions, private banks, and high-frequency trading firms are the ones with the bikes and cars. They have better tools, faster execution, more information, and enormous cash reserves that give them an unfair advantage. The race is the same for everyone, but the vehicles are not. And in this game, the slowest almost never takes home the prize. At this point, you might be asking yourself, if the race is unfair, how did people like Warren Buffett and Jim Simons actually get rich? The answer is simpler than you think. They didn't win by sprinting blindly. They learned the rules of the game. The first step is building a strong foundation, understanding what a stock really is, why companies issue them, and what truly makes prices rise and fall. Without this knowledge, you're not investing, you're just gambling. The second path is to leverage the wisdom of professionals. Instead of trying to fight the giants alone, you can put your money into institutions like mutual funds or index funds, where portfolio managers and strategies work on your behalf. But here's the catch. You must choose wisely, because not all funds are created equal. The dark truth is that most retail traders lose money. But the brighter truth is this: wealth is built not by chasing quick profits, but by learning, by patience, and by putting your money in the right vehicles. That's how Warren Buffett, Jim Simons, and countless others turned the stock market, a game designed to be unfair, into the greatest wealth-building machine in history. And that was the dark truth of the stock market. Remember, it's not about beating Wall Street at their own game. It's about understanding the rules and playing smarter. If you found this video valuable, don't forget to like, share, and subscribe to Finance Master for more insights into money, investing, and wealth building. And if you're new to all of this and want to understand the stock market from the very beginning, check out my next video, Stock Market Basics, where I break down how the market actually works in the simplest way possible. Subscribe to get notification to next video. See you there.